Welcome to my channel, and thank you for choosing my video to watch. This video is actually part of a longer video that I made about investing in stock market for the beginners under the title Complete Guide on How to Buy and Sell Stocks in Canada Bourse with Questrade. I will also put the link of that longer video in the descriptions below this video. So if you find this video helpful, make sure to check that as well. Also, please make sure to comment and tell me your questions if there is any. I will answer as much as I can, and give me any sort of criticism, positive, negative, and tell me what you think about it. So thank you once again, and without killing time more than this, let's just jump right into the video and see what I've prepared for you. Okay, so in this part of the video, we're going to go over the most frequent words used in stock market. I don't want you to stress out and just memorize all of them, but the ones that I have made in green are very important. I want you to, if you can, take a screenshot, or if you have like a pen and paper handy, you can just write them down because we're going to need them, okay? So the very first word, online brokerage, is something between you, is a company between you and the stock market that allows you to buy and sell stocks, such as Questrade, okay? Before it used to be by telephone, but hopefully after the advent of internet, there are so many of them, which we're gonna go over later in the video, but that's what it means. Bourse is another term for stock market. This word is used mostly in France and Germany, but also in Persian we call it bourse, okay? Bullish market and bearish market. So you may have heard about it. As the picture suggests, if you can take a look at the picture, a bullish market is the one that you feel the stock price or the market in general goes up in price, and the bearish market is the one that you feel goes down, okay? And the way you use it is like, for example, they say, I'm bullish on this stock, or I'm bearish in this stock. There's another word, I think I have it, which is called neutral. Neutral means neither bullish nor bearish, okay? Over-the-counter, OTC market, a market in which investors trade, so I don't have this, without a centralized exchange authority, meaning that they trade with each other, so there's no there's no body that there is actually a body of governing, but the first of all, the risks are higher. Second, the criteria of being listed as an OTC stock for companies are less hard, are very easier, okay? So that's why most companies that they want to start, they use this type of listing before they go to the main markets, okay? Now, it doesn't necessarily mean that just because it's riskier and the criteria are easier, it doesn't mean that there are no big companies listed under OTC. There are some big companies listed under OTC, and the reason that I made it green was because although it carries risks, but if you know which stocks to choose, the potential of you gaining a lot more is much higher than the normal market, because you are paying, let's say you have $100, so the stock prices are far less, okay? You're paying, by your $100, you can, I don't know, buy, if the stock price is 1 cent, you can buy far more shares of a company than if it was just $5, okay? Ticker symbol, which is also very important, because if you don't match the ticker symbol with the name of the company, you might buy something else, something that's not what you're intending. Let me give an example. Just recently, Elon Musk tweeted about the messenger Signal, and people thought that he's actually talking about a company called Signal. So they went ahead and bought the stocks of the company Signal with the ticker symbol SIGL, I think, if I'm not mistaken. and the stock price, rocketed from $5 to $35. And so actually after a day, the price was corrected because people sold. But so that's why I say ticker symbol is very important. And what it is before, if you can take a look at the picture, you can see that there is a tape, a paper tape coming out of this device. Before, when there was no internet or computer, they used to use these machines with very narrow paper tapes to actually release to know the stock prices. And because there was no space and they wanted to save some space, they allocated shortened form of the name of the company to each company so that they can easily recognize the name of the company. For example, Apple becomes APPL, or my stock that I'm really happy with, Very.cn, the Very Good Food Company. They shorten it to just VERY.cn, which shows that the company is listed on their Canadian Securities Exchange, which I'm going to explain a little bit. And by the way, usually the last letters after dot show where, for example, or in which stock market the stock is listed. So for example, if it is .to, it means that it's listed on the Toronto Stock Exchange. If it is .cn, it means that it's listed under Canadian Securities Exchange. Okay. Tax shelter, a means to avoid paying taxes. Yeah, as simple as that. Tax shelters usually are accounts that the government has put forth to help Canadians invest more. Okay. Let's go to the next. Okay. Share, unit of equity ownership. So basically, a share is one unit of a stock of a company. Checking account, an account ideal for everyday use. So an account that you can have multiple. So usually we have savings account as well in Canada. So these are the two main common forms of accounts, bank accounts. What a checking account allows you to do is to do more transactions than in a savings account. However, you must know that you should pay a monthly fee to keep your account open. I don't know, maybe in TD it is just $4.99. I don't know, some banks even charge up to $30-$40 to just keep the account open. Unless if you want to waive this fee, you have to keep an amount of dollars in it. I don't know how much. For example, for Scotia, when I had it, it was $3,000. So if you could keep $3,000 over the course of a month, you wouldn't be paying that fee. Okay, for the checking account, so your transactions would be unlimited. But for savings account, it as the name suggests, it's mostly for savings. So some banks pay you a good amount of interest on their savings account, like for example Tangerine. And the good thing about Tangerine is that its checking account is free, so you have unlimited transactions and everything's just free. So I'm going to explain more in the further in the video. Tax-free savings account, this is the one that we're going to work with, because it's a tax shelter that allows you to buy and sell stocks, and whatever you gain, you don't need to pay any taxes on. Because as you know, in Canada, you have to pay taxes to the money that you gain through interest or any sort of monetary gain that you have to pay taxes on. But if you do it under TFSA, you're not going to be paying any taxes. It has some limitations and some good shortcomings and some I would say negative and positive aspects. So I'm going to go over them later in the video. Registered Retirement Savings Plan, RRSP, a tax shelter suitable for growing investment for when a person becomes old. Okay, so this particular it is also a good option. You can also open a RRSP with, I think, Questrade, but again, I only work with TFSA, so that's why I don't explain it later. A registered education savings plan, or RESP, a tax shelter for you can invest in it, and the government also contributes for the child. I don't know, every year I think it's up to $7,000 that the government pays, depending on how much you put. And so by the time your child reaches 18, there will be some money collected for your child's education. And it doesn't really matter how much is your income. Even if you're a millionaire, the government still pays that amount in your RESP. And by the way, something that I have to mention here is the name for RESP and RRSP has chosen better than TFSA, because TFSA, they call it tax-free savings account, which many people treat it as a savings account, which they actually shouldn't do that. It is a program that is meant for investing. Like I would say 80% of people use it just as a normal bank account, savings account. Okay, so let's go to the next word, margin account. An account in which the brokerage lends money to the investor. Okay, but that doesn't mean that it's just that. If you want to do active trading, day trading, which I am against absolutely, you need to open a margin account, because TFSA, as I said, has its own limitations, and this is one of them. So that's why I mention it here. Yeah, that's pretty much. So, and what does it mean by borrowing, like by lending money? It means that if, let's say you have, I don't know, $1,000 and you want to just buy stocks of a company that is going to cost you $2,000, so you can borrow $1,000 from another $1,000 from the brokerage itself, but you have to pay interest on. So remember that if your balance falls zero, the brokerage still pays for that 1,000 and your transaction goes through, but you have to pay interest for that 1,000. Arbitrage, simultaneous buy or sell same asset from different markets. Let's say, for example, the stock of, I don't know, XYZ is being traded in the US and Canada, okay? And XYZ produces metal stuff. So let's say that the stock price in Canada is cheaper than America. So what you do is to buy the stock here and sell it in the American market. So you gain something, right? The difference is going to stay for you. So this is called arbitrage. Quarter, every 3 months is called quarter. Lot means the number of shares that the investor buys or sells. So this is important. That's why I made it green. If you want to waive fees in Questrade, your lot should be a multiple of 100. Remember this. Quote means the last price of an asset. So if you hear that, that also is important, because in Questrade we have two levels of quotes. The first level, which is free, is the one that everybody gets, which you have to refresh the quotes every time you want to just buy. So you have to refresh it manually to get the latest quote. But if you pay a little extra, I think I don't know how much is it for per month, if you're an active trader, sorry, and you request them to give you level 2 quotes, then it gets updated automatically. So you don't need to refresh manually. Ask price. Okay, ask and bid price, these are important. These I want you to pay attention. Ask price is the lowest price that a seller is willing to accept to sell their stock to you, and bid price is the highest price that a buyer is willing to pay to buy an equity. Okay, so, and this is usually the system that determines who has the lowest price in the queue and who has the highest price in the queue for bid and ask. So the system itself will create the queue, and based on that, people do trade. Spread is the difference between ask and bid. So spread, when it becomes important, when if the spread is high, let's say for example the bid and ask prices is the difference is big. So let's say for example a stock price is $1. The bid is right now $1, but the ask is, let's say, I don't know, $10. It means that people want to actually sell more than they want to buy. Okay, so this shows that the volume could be low. Okay, this shows that the volume could be low, and there's not enough buyers. Liquidity means how fast an asset can be bought and sold. This also is important because If the stock is not liquid, you're kind of stuck in it. You know what I mean? So you have to choose a stock that the volume or the number of shares being traded is good. If it is like, I don't know, 10,000 per day or 20,000, and you want to buy, I don't know, 50K, 100K of it, then that's not a good idea, okay? Fill. When an order is partially done. Remember, fill, there's a difference between fill and execution. Execution means when an order is completely done. So usually that's what I'm understanding from, the difference of the two. Market order. Oh, okay. So these 4 types of orders are very, very, very important. So I want you to please screenshot this, or I don't know, write them down. A market order is the one that gets executed almost immediately on the price of the market. So whatever the price is, it gets executed on the spot. Remember that it always, all the time, carries ECN fee. So you have to pay ECN fee on it, apart from the commission. Okay. There's a lot to be said about the market order. I really don't like market order because I'm a long investor. As I said, I don't want to do day trading, but day traders usually go with this order. Okay, so okay, for now I think it's enough. Maybe later we go over it more. The next one is limit order, an order that you can specify the time and the price limitation, okay? And this could execute immediately or not, depending on how you put this order, okay? So basically, okay, something that I have to say about market order is you can also specify the time, but you can only specify the ending time. So for example, you can say, okay, I want market order, but I want it to be done only during this day, during this trading day. If it's not done, then cancel it. You can ask the system to do so. Okay, so let me explain how these two work. Let's say you want to buy 100 shares of XYZ. If you place a market order, the stock price, the stock price is right now $1. Okay, so let's say you want to buy 100 of it. So if you place a market order, you cannot decide about the price. So the system may fill 20 of your order in this second, the next second another 20, the next second another 20, and the next second another 20. So, and each second the price might go up or down. Okay, I'm going to give you extreme numbers just for this example, but just so that you know, it's not going to be that extreme like this. But let's say this second the stock price is $1, next second is $2, the next second is $3 and $4 and so forth. Okay, so what happens is your first 20 shares is going to be bought by the price of $1, the next one $2, the next one $3, and so on. Okay, and you only have $100, so you may not get as much shares as you wanted. Okay, so you cannot determine how many shares you want. The system will determine that for you. Okay, the price and everything. It has its own benefits, as I said. The benefit of a market order is that it gets executed almost immediately, but the the drawback is that there's no way for you to determine how many you can get. So the system will determine for you. However, a limit order, depending on how you put it, you can ask the system, okay, I want to buy 100 shares of XYZ only at $1. So the system will say, okay, I will only execute your order or fill your order with the price that you mentioned. I will buy 100 shares for you with the price of $100. The drawback for this is it may take a couple of days or even weeks, depending on the stock and the volume, for your order to be filled, okay, or executed fully. So just have some water. Okay. Yeah, so that's the difference. Now I'm going to talk about two other important concepts which are related: marketable limit order, non-marketable limit order. For now, remember that what I want you to do is non-marketable limit order. So let me explain what it means. A marketable limit order is a limit order that executes immediately, that is treated like a market order. Now how? For example, imagine that the XYZ stock price is $1, and you put a limit order, but you put the price, the bid price, as $1. So you choose the price of the market that is right now. In this second is $1, and you choose it. You say, okay, I want to buy 100 stocks, but on the same price that the market is. This is called marketable limit order. So it may gets executed immediately. A non-marketable limit order is a limit order that doesn't execute immediately. And what should you do to make it not execute immediately? I'm telling you, remember this. When you want to buy at the time of buying, you need to put an order that is 2 to 5 cents less than the bid price. And at the time of selling, you need to put the order 2 to 5 cents more than the ask price. Okay? And why? Why should you do that? Because you don't want to pay ECN fees. Okay? So remember how I said you have to pay ECN fees ECN fee on market order? Remember, any order that gets executed immediately, you have to pay ECN fee on it. We're going to talk about it later. So that is why I want you to be familiar with only of course I want you to know about all of them, because it's up to you to choose. But if you want to waive the ECN fee, so this is for your non-marketable limit order. And I'm repeating again, a non-marketable limit order is the one that at the time of buying is 2 to 5 cents less than the bid price, and at the time of selling it is 2 to 5 cents more than the ask price. Later we're going to go over it more, so no worries. Sorry, have more water. Okay, commission is the money that you pay to the broker to buy or sell assets. This is not waivable, so you cannot waive it. And some brokerages such as Wealth Simple do not charge any commission, but they have so many other problems, and that's why I have chosen Questrade. Later I will talk about it more. Fee is the money that you pay to the brokerage for maintenance purposes. It's not just for buy and sell. Okay, and as I said, you can waive this. So that's the difference between fee and commission. You can waive fee, but you cannot waive commission. Electronics Communication Networks fee. This is a type of fee that you're going to be paying in Questrade if you don't know how to put your order. Okay, this is what they charge. It's a minuscule amount for stocks. I don't know if you want to buy 1,000 or 2,000, but when you want to buy, large orders, then that's different. It's gonna pile up even up to $100 or $200. So you need to learn how to waive this, which I'm going to talk about it. Dividend, money from profit that a company pays to its shareholders. As simple as that. Dividend is actually paid usually. So the difference between dividend and the normal profit that you get is, the normal profit is like when you buy a stock and leave it there, and the price increases over time and you gain some money. So that is how it is. But dividend is the one that the company, the money that the company pays you either monthly or quarterly. Okay. Sorry, dividend yield, amount of dividends paid to shareholders in percentage. So that's the same thing, but with a percentage. There are two ways that you can calculate dividend. So either dividend per share or the percentage of the dividend that the company pays, which we're going to go over, so no worries of that. Profit or loss, this is the first thing you want to see, P&L, okay? The money that you gain or lose. And usually in Questrade, if you, like in other, I don't know about others, some apps are different in color, but if you gain something, Questrade shows it in green. If you lose, it shows it in red. Volatile means unstable price changes, okay? So let's say, for example, today XYZ is $1, tomorrow it's $2, the next day is $3. So that's how volatile it is. That is, the amount of volatility. Earnings per share or EPS. it is actually, so you don't need to, basically, as I said, I'm not a fan of technical analysis or whatever, so if you've heard about it, I'm just telling you so that your ear is familiar with these things. I don't want you to like stress out and think about it, and so this is something that shows the profitability of a company, okay? And the way they calculate it is they take the profit of a company, divide by its outstanding shares. Now, one of the reasons that I really don't care about these things is that, for example, if you go, I am a fan of IPOs. IPOs are the companies that have just been listed in a stock market. So companies like those, or penny stocks, companies that have, their stock price is very less, under $5. So a company that starts, just recently, like within the last year or last 2 years or whatever, they may have negative earnings per share. They may have negative in it, and this could cause people thinking that, okay, it's less profitable. But that's not true. So that's why I don't really care about these numbers. Dividend per share, DPS, which we talked about, which means the amount of dividends paid to shareholders on a share basis. We're going to see how it's calculated, but it's called DPS. Beta, a measure of stock's volatility in relation to the overall market, a stock risk actually in relation to the overall market. And it has we have 5 different values for it. If, and again, I'm just telling you so that you hear them. I don't want you to know and stress out yourself for this. Beta, if beta is above 1, so let's say 1.45 or 2 or whatever, the stock is called aggressive because the risk is higher in comparison with the whole market. If the stock price is 1, it means that the price that ups and downs of the stock price, or the moves of the stock price, is similar to the moves of the whole market. If it is between 1 to 0, or let's say between 0 to 1, it is called defensive stock because the risk is less than the whole market. So let's say that, I don't know, if the market moves 1 value, this could be, for example, 0.45, so that's how it is calculated. If it is 0, then it means that the stock price of this particular company does not follow the overall market. So if the market is up today, it could be down. If the market is up tomorrow, it could be up too, right? So it doesn't follow the movement of the stock market. And if it is the 5th one, if it is under 0, if it is sub-0, negative, it means that the stock market the stock goes the opposite way in comparison with the whole stock market. So if the stock market goes up, this particular stock goes down. If the stock goes down, this particular stock goes up, right? So these are the 5 stages of beta, but that's not that important. Book value is the value of shares at the time when you buy. It's called book value. It has a further, these words have, further meanings, but for now, just know this. Okay, market value, price of an asset right now, right? The current price of an asset in the market, it's the current. It's where you look at it. Okay, so it's called market value. How much your asset is worth right now. Balance sheet, a statement of assets or capitals of a company. Usually they release balance sheet, I think every year or sometimes quarterly, so that's balance sheet. And this is a good thing because people know how much of the expenditure was, how much the company gained, It's a comprehensive report of the company. Initial public offering, I think I talked about it, when a company is listed in a stock market for the first time. That's called IPO, initial public offering. And the reason I made it in green is because these stocks usually carry higher risks, but they carry more gains too, right? Like for example, if I want to give an example, it was Shopify. 5 years ago when it came to the market, it was very cheap, but within 5 years, every $5,000 that you would invest into it would gain you $95,000 now. So if 5 years ago you would invest $5,000, by now you would have $100,000. That's how an IPO could be good. But again, it requires time for you to find a good IPO. Bond. Usually these are debt certificates that companies issue that you can buy and sell, and they pay interest, okay, to the investors. I'm not a fan of them, but this is some sort of an investment too. Options is also, honestly, I don't know what it is. It's a means by which the trader is given the right to buy or sell a stock in the future of an agreed price and a date. So you basically, it's something that's related to the future. Again, I'm not a fan of this. I just trade stocks, but it's up to you. Warrants are actually long-term options. I'm just bringing them here so that you know about them, and if you're interested, you can just search more. Position, the amount of assets that you have. Usually, that the way they use the word is, for example, opening position and closing position. And by opening position, they mean buying. Closing position means selling. That's it. Long position, buying and owning the assets. Okay, that's called, when you have, so let's say you buy a stock of XYZ, you keep it for 1 year and you sell it and you gain something. That's long position. But we have something called short position, borrowing the assets. And we have something called short selling, which we are going to go through in the future, further in the video. So, which means to borrow the shares and sell with the hope that the stock price goes down and you gain something. I will explain how it works. It's a very interesting thing. I don't recommend people do that, but just because it's interesting to me, I'm going to explain it later. Yeah, short selling. Yeah, see, take advantage of a losing stock. It's a very interesting thing. Pre-market trading. Trading before the market opens officially. Usually in Canadian stocks, we don't have this, neither pre-market nor aftermarket, which is trading after the market closes officially. But US stocks have this. In Canada, I cannot say about the whole stock markets, but as far as I know, the stock market opens 9:30 Toronto time and closes at 4 p.m. So if it is pre-market, I think pre-market US in Toronto time starts at 7:30 or maybe 8. Not sure exactly. And the aftermarket is up to 5:30 p.m. Okay. Volume, the number of traded shares, as I mentioned it before. This volume is very important because if you don't choose a stock that has good volume, chances are you're going to stuck with that price, and it's very hard for you to liquidate it. Average volume, the average number of shares traded on a specific time. Okay, for example, say average volume today was 300k. It was not like up to 300. It's an average price. Average amount, which means that 300k shares were bought and sold, or even more. Market capitalization, which you can see it as market cap, value of all outstanding shares. So basically the shares that a company have in the stock market, if you calculate how many shares and divide it by the current price, you're going to reach a market cap. Market cap is important because it has different types of it: nano cap, micro cap, large cap. So I'm going to explain a little bit about them, but I'm a fan of small cap companies because, as I said, the risk is high, but the gains are high too. Small cap, a company that has a market cap between $300 million to $2 billion. Okay, so that's the official kind of explanation of small cap. Mid cap, a company that has a market cap between 2 billion and 10 billion. Large cap, a company that has a market cap over 10 billion. Okay, mega cap, I think mega cap is something that is, over $1 trillion, like Apple. Okay. Penny stock. This is also, I made it in green because, again, the risk is higher, but the gains are higher too. A company that its shares are valued under $5. This is one definition. So many people don't agree on this definition, but I like it. Okay. So basically, anything under $5 is called penny stock. It doesn't mean that anything. So, for example, there's no set definition for this, but. So right now, for example, my stock Veri.cn, yesterday it was more than, I think, $6, but it's still considered a penny stock. So basically, if I want to put it in words, it would be anything that's lower than $5 is called penny stock. There are different definitions of it. You can search depending on how people define it. So pink sheets, PK, sorry, which I think in Questrade, the symbol is PINX. So if you see in front of a ticker symbol, if you see PINX in Questrade, it means that it is traded in pink sheets. A stock that is traded over the counter. Okay, that's called pink sheet. And the reason that they call it pink sheet is because in the old days, they used the papers that these type of stocks were traded. The color was pink, so that's why the name comes from that. Price per earning. Price per earning is like EPS. So these things both show the profitability of a company, a ratio that indicates how much the market is willing to pay for the stock based on the company's past or future earnings. Okay, so this can also show the expectations of the investors. If the investors feel that the company is going to do good in the future, this number could rise. Okay, but for me, again, these things are not, I don't really care about these numbers. I'm just letting you know what they are. Average down is a very good strategy. Okay, imagine you have so let's say you have 100 shares of XYZ. You bought them when the price was $1. Okay, so you spend 100 and now you have 100 shares. So you are actually confident that this company is going to do well in the future. However, now, for whatever reason, the stock price has decreased to 50 cents. So what you tell yourself is, okay, I have another $100. So let me go ahead and buy more shares of this company to gain more in the future. So you put that 100 and you gain, I think, another $200. So another 200 shares. So right now you possess 300 shares of that company. So this is called averaging down. Okay. And there's another thing, averaging up, buying additional shares of the same company. So in this case, XYZ, when the prices increase. So let's say you bought the XYZ shares $1 each for $100. So you have 100 shares right now. Okay, you know that this company is going to do so well in the next 1 year, and the price is going to skyrocket to, I don't know, $30. So it is logical for you to invest more in the same company, right? These two strategies are the ones that I really like. So when the price reaches $5, you say, okay, I am sure that the stock goes to $30 within a year, so why not buying more? So you bring more money and buy more shares. That's called averaging up. Earnings date, usually this is important because it's a date on which a company releases its balance sheet. It is important when you want to receive your dividends. And that is why. Ex-dividend, yeah. The date on which a company's dividend allocation have been determined, which is usually 1 business day before the earnings are out. Okay, so 1 business day before the earnings. Let's say today is 5th of March 2021, and let's say tomorrow is the X dividend date that the company announces, like, so which means that the company will announce its earnings the day after tomorrow. So if you can buy the stocks today, which is March 5th, you would still receive the dividends even though you possess the shares only for one day. However, if you buy it tomorrow, which is the X dividend date, you're not going to receive any dividends, and the company collects the dividends for its own. Okay, so that's why it's important. I made it in green. Days range, difference between the highest and the lowest price in a given day. It's called days range. 52 weeks range, please let me know. It's the highest, and I just don't understand. 52 weeks is 1 year. Honestly, please, if you know, please let me know too, because 52 weeks range means the difference between the highest and lowest price of 1 year, and yet they still call it 52 weeks. So why don't they say last year? I don't get it. Please let me know in the comments. Thank you. Okay, 1 year target estimate. You see it in Yahoo Finance, which is one of the best websites to monitor stock market. That's the one that I use. So this 1 year estimate, they do an estimation based on analysis. They do an estimation of the stock price 1 year from now. So that is 1 year target estimate. Technical analysis using chart to predict future stock price. This is silly to me. So I really don't like it. They believe that usually these people who do technical analysis, which are day traders and swing traders, they believe that no matter what happens around the company in the environment, the price says it all. The stock price says it all. So they all care about chart. They don't really. I'm not saying all day traders don't care about fundamental analysis. Fundamental analysis is analyzing environmental factors that could affect the stock price in the future. Okay, so fundamental has two variants, tangible and non-tangible. Some of the things that are some of them are actually the ones that you can give them numbers. For example, earnings, how much earnings they had, how much losses, stuff like these can be numerical and non-numerical. Let's say numerical and non-numerical. Non-numerical are the ones that, for example, who is the manager? What is his background of, does he know about this company or not? So these are all the things that are environmental factors that can play a very important role. I am a fan of fundamental analysis. I'm not a fan of technical analysis, because usually what you do in technical analysis is caring about charts, and I may make a video about why I'm against it, but for now I just want to say that fundamental analysis is my own choice. Day trader, as I talked about, a trader that executes orders with large volumes in a short period of time. Okay, to benefit from short-term price fluctuations. Honestly, I'm against this. If I want to give an example, if you've ever used a solid but not liquid soap, you know that the more you use that soap, it gets lesser and lesser. Okay, so basically the money that you give to these day traders over time decreases. So that's what I think about it. Exchange traded fund, or ETF, basket of securities that is traded like a stock. So basically ETFs and mutual funds are kind of like managed couple of stocks together, okay, that are managed. I think I have mutual funds. Yeah, mutual funds, collection of money from different investors to invest in a particular security. Okay, so usually mutual funds have a person or a body of people that manage how the allocations take place, how much of investment goes to which company. But ETF is not like that. ETF is a set amount. So let's say they choose 100 companies, and if you buy one stock of this ETF, this particular ETF, it's as though you own a fraction of each company's of each one of those 100 companies shares that are being traded in this ETF. Okay, so that's the difference between ETF and mutual fund. Norbert's Gambit, this is the cheapest way that you can convert your currency. Imagine you want to buy American stocks in Canada. So you would have to have American money, you have to have US dollars, right? So you have three options, either to go to a currency exchanger or use your own broker, because usually brokers do that for you, or use this method. This is the cheapest method. I'm going to explain a little bit about it too. Journaling is a process of converting currency in Norbert's Gambit. This is important also too, to know that so I'm going to explain how it is, but now for now just be aware of it. K from the word kilo, meaning 1,000. So for example, 50K or 100K means 100,000. Guaranteed Investment Certificate, or GIC. It is low risk. Yeah, it's a low risk way of investment that they pay you an interest in a set amount of time, let's say monthly or quarterly, and your money also is guaranteed to be returned to you, whatever you invest. However, I am against it because the gain is very less. So I don't really care about it. I'm only a fan of stocks. Security, a financial investment with monetary value. So these are base security, and these are basically the same things. Equity, shareholders stake. Maybe these are the meanings that I found, and I just want you to get familiar with these words. But realize means selling or converting your equity into cash. So when you buy a stock, let's say you have 100 stocks of XYZ. If the prices go up, Questrade will show you in your P&L section, will show you your gains in green. But they are not your gains because you still haven't turned them into cash. So it could be good and bad, because it could be actually good because you may lose. Let's say it actually happened to me. When I just bought my stocks in Very, I bought the first purchase, I think it was for 27K. And the next 2 days, I was seeing, every day I saw a 5K, 7K loss in my P&L section. And it showed me in green. But I was happy because it was unrealized. I didn't sell them. So realizing means to sell and turn your assets into cash. Up until the moment that you haven't sold, you have not lost or gained anything. Microcap, I don't know why I didn't put these words besides each other, microcap and nano. When I was talking about a microcap, is a company that has a market cap between 5 million to 300 million. Sorry. So small cap was 300 million to a billion, right? So it's microcap. Nano cap is also a company that has less than 50 million, okay? 50 million or less. Oh, these two are very important. Adding liquidity, removing liquidity. Remember that adding liquidity means placing an order that doesn't get filled immediately. And removing liquidity, placing an order that gets filled immediately. So this comes into play when we want to talk about non-marketable limit order. Because a non-marketable limit order is basically the one that adds liquidity to the market. Basically, your order is going to be staying in the queue, whether for a couple of seconds or a couple of days or whatever, so it doesn't get executed immediately. So what we want is adding liquidity, because anytime you remove liquidity, you have to pay ECN fee. Rally, short term, extensive, fast price increase. That's called rally. You hear it in Yahoo Finance forums. Okay. When the stock price goes up unexpectedly for a short time. So my stock, which was very.cn, the very good food, I experienced these a lot, 3 or 4 times, And it's because people buy, in maybe institutions come into play and buy a lot of shares, so that's why the stock goes up. Market crash is actually, I think, the opposite. It's unpredicted and fast price decrease, like the one that we had for Corona. Okay, it started in March, I think. It started in March, and it could be a good potential, very good opportunity for people to invest. Most stocks have decreased by even half or even more. For example, a company such as RioCan, which has been in the business of real estate investment for around 25 years or even more, the stock price before the Corona hits was $25, $27 per share. But on March, you can see that it decreased to even $12. So it was a very great opportunity for people who wanted to buy the stock, because RioCan pays good dividend. If you're interested in dividend, in getting cash for your money instead of putting your money in a bank account, in a savings account, which pays you less. I think now it is 5%. I'm not sure, but it pays very good dividend, consistent dividend. So that's why. Okay, correction. Correction means a 10% or more decrease in the price relative to its peak. This word is also something that you hear a lot, okay? So let's say a stock price of XYZ goes up. That last night, for example, it went up to, $1, and then it decreases to $90. Let's say in the last 2 weeks, it was being traded 80 to 90 cents. But just during the last day, it went up to $1.10. And then after it decreases back to $90 cents, then we say that there's a correction, because the price was increased without a reason, right? That's why they call it correction. Anonymous order, type of order in which only a small fraction of the lot is visible to the market. I really like this order. If you're a millionaire, let's say you want to buy, a million shares of a company with a volume of 100K, you want to buy, let's say, a million shares. So this could cause prices to go up, because people see that a person wants to buy 1 million shares. So they think that, okay, let me just sell my stock. That's why there is something in the system that hides the big portion of your lot, so that people don't see how much your lot is, how much you're buying. So let's say if you determine, you can say, okay, only show to the market that I'm buying 50,000 shares at a time. So that's how the order gets executed. It's for a very complicated situation. It's not actually for me and you average investors, but I'm just letting you know that this exists. Portfolio, basket of securities. We have 5 different portfolios, which I'm going to go over. Yield, percentage of earnings over a period of time. If you remember, we talked about dividend yield, so that's that. Okay, good till cancelled, GTC order. An order that lasts until completed or cancelled. It doesn't last forever. Usually in Questrade, it lasts for 90 days. I think in CIBC, it lasts for 30 days. Not sure though. But that's the meaning. It means that either the order gets completed or it gets cancelled after a set amount of time. That's called GTC. That is what I like. Good till date, GTD, means an order that lasts until it's specified. You can say, for example, I put this order. If it doesn't get filled within a week, just cancel it. Or whatever that's filled. Let's say you put an order for 100 shares of XYZ. You put a buy order. So the system fills 20 of those. So you buy 20. And the other 80 is not executed. So you say, I don't care whether it's executed or not. I want you to cancel this within a week. So you're left only with 20 shares of that company, okay? So that's how good till date is. Day order, an order that lasts only up to the moment that the market closes. So immediately on the spot where the market closes, this order gets cancelled, no matter how much of it is filled. Moving average, price average over a period of time. It's called moving average. So they just consider how they just take the average of a price during a setup. So let's say moving average for this week, moving average for the last week, Trading halt, temporary stop of trades. Usually trading halt, the company can ask for a trading halt from the stock market that the company is listed under, or the stock market itself halts the trading for reasons. Maybe there's a big news that the company wants to release and they don't want to shock the market. So let me give you an interesting example. My stock, Veri.cn, when the prices reached a YouTuber called Jeremy, released a video on Veri and how many shares he bought. So he's got more than a 500k subscribers. So people jumped in to buy, and the stock price rocketed from 4.5 to 5.5. So $1 is a lot. $1 is so much. And so the company understood about this, and they released the news exactly 30 minutes before the market closes. So the stock crashed. The stock price crashed and went back to 430 from 550 or 560, went back to 430. So people were actually asking why the manager did not do any trading halt. So because the manager was kind of new to these things, so he didn't ask for a trading halt. It was a good idea if he could do that, or maybe he could wait before releasing the news till the next day. But whatever it was, so he didn't ask for a trading halt. But later, in different occasions, he did. So that's what a trading halt is. Standard & Poor's S&P index of a market based on market cap. You may have heard about S&P 500 in the United States, which follows and indexes the stock price of top 500 companies in US. So it's basically an index. It's a number that shows how good or bad they've done. Real Estate Investment Trust, REIT, which I think I talked about one of them, RioCan, company that operates, owns, and finances income-producing properties, such as residential properties or industrial properties. Usually, REITs are mandated by the government of Canada to pay dividends monthly. Okay, usually. So that's why. The ones that, so your dividend. So there are companies, I think, like Enbridge. Enbridge is a company that invests and manages infrastructures of energy, such as gas. Okay, so this company pays, I think, in a 3-month or quarterly intervals, but REITs, as far as I know, are mandated to pay monthly. Dividend reinvestment plan. Automatic repurchase of shares of the same company by its dividend cash. So let's say you buy stocks of RioCan. You're entitled to receive dividends. But if you want, you can ask Questrade to buy back shares of the same company again and again, every month with your dividend money. Okay? If you want to do it on your own, you have to pay commissions. Because as I said, any order that you place, you have to pay commissions and ECN fees. But if you ask the Questrade to do this for you, automatically, it is actually free. So that's the good part about DRIP. Dilution, issuing new shares by a company. This could be good. So many people think that it's not, but I think it's good. It depends on how the management uses the money gained through this. Because let's say, so the manager of the company that I have, Very Good Food, Mr. Mitchell Scott, he actually diluted once, I think. He issued some new shares, and it was for him to be able to clear his debt. This is a good strategy, particularly for new companies, okay, for IPOs. But if they don't know what they are doing, they can decrease the price of the price per share. Stop loss, an order that's filled once the stock reaches a specific price. So you can say, for example, if the price of XYZ right now is 50 cents, but if it reaches $1, buy for me, and if it reaches $1.50, just stop buying. So that's how a stop loss works. Pump and dump. This is also something you hear a lot in Yahoo forums. Fraudulent practice of encouraging investors to buy shares in order to inflate the price, then selling one's own shares while the price is high. This is basically a type of a scam, because you can see people, any time that a person talks about a share of a company without reasons, without analogy, without ground reasoning, I think that is called pump and dump. Usually people do this, even the company owners, to scam people sometimes. They talk about, for example, there was a company back in the days, I think 10 years ago, 20 years ago, there was a company in Canada. It was a mining company that claimed that they have found a mine in, a gold mine in Africa, that they can extract so many gold or whatever. So the price rocketed to 250 or even more. But they found out that the whole managing system and everything, it was just a scam. So they tried to release false news in order to increase the stock price and then sell their own shares, which in this way they were able to gain, I think, $5 billion from people's money. So that's what's called a pump and dump. Insider person, usually from the management. It could be from or not from the management team of a company that owns more than 10% of voting shares. Voting shares are the shares that, if you possess, you're allowed to vote about the operations of the company. It's called an insider. Support. Temporary resistance against price decrease caused by excessive demand, excessive buying, right? The opposite is exactly resistance, temporary resistance against price increase caused by excessive supply. So when there's more shares, when there are more sellers than buyers, resistance happens, and when there's more buyers than sellers, support happens. All in kind means as is. We're going to see this when we want to transfer account to Questrade. So there's an option that you can choose, which is, I think the best option is all in kind, which means that you ask Questrade to transfer your account from other broker or other bank with the same stocks or ETFs or anything that you have. You can also ask Questrade to cash everything, to liquidate everything before transferring. But I find this option to be the best. Consolidation, price stabilization. Yeah. I don't know, it could be similar to correction. Okay. But the idea is when the price fluctuates so much, and at the time when it reaches a stable point, it's called consolidation. Trailing 12 months. Please let me know this, of course. I myself don't know why they call it TTM. Last 12 months. Okay, last 12 months is 1 year, buddy. But I don't know why they call it, trailing 12 months. So please let me know if you know. If you're a pro, let me know. Why is the name like this? Why don't they call it last year? Yeah, CAD and USD, CAD and USD, Canadian dollar, US dollar. And let me tell you something interesting. Maybe of wondering what that line is on S. So you know that the first colonizers of America were Spanish people, and their currency was pesos at the time. So when they wanted to mention pesos, they would write the traders at the time, they mentioned P, they would write P and S. Over time, lazy traders, they would put P and S on each other. And over more time, when the time passed, the round part of P was omitted, and they used to just write S with one line on it. Okay, so that is the history of $. And also, I've heard that when we're talking about a million or more, there's 2 lines on the S. So if it is more than 1 million, there's 2 lines. I'm not sure, but that's what I heard. Non-sufficient fund, NSFE, basically, the status of a checking account that does not have enough money to cover transactions. Let's say you pre-authorize your bill company to take money from your account every month. This month, your bill is 100 for your internet or whatever, and you have 0 in your checking account. So the company comes to take money, but there's nothing. So the bank will charge you a fee. That's called non-sufficient fee, which I think in Tangerine it is $40. In other banks it's 45 or even more. Stock split is dividing the existing shares into multiple shares by a company, and that's done because of making it possible for lower income population or people with limited budget to invest in the company. Apple, for example, is the one that did so. Tesla also did so. So if I want to give an example, let's say XYZ stock reaches $2,000 per share. So this is difficult for average investors like me and you to invest in this company. So what happens is the company divides that 2,000 into 10, for example. Okay, so the stock price will be decreased to $20. Now you might be asking me, okay, what about my stocks? If I already have one stock of that XYZ company and I bought it for $2,000, what would happen to? So right now it is worth $20. I say no. You are going to get if you do the math, so 20,000 divided by 20, it's going to be, so divided by 10, I think it's going to be $200. So your one stock is going to be 10. So they're going to give you 10 stocks. Okay. So let me give you a good example that I can calculate. Let's say you buy XYZ stock and it is $100 now, and the company decides to do a stock split, and they do a stock split, and the price per share right now is $50. So for you, instead of having one stock, they give you another one stock as well. So your stocks are 2. So you now, instead of having one share which is worth $100, right now you would have 2 shares that worth $50 each. So you won't lose anything. Basically, it is good for, as I said, for people with limited budget. Okay, so these were the frequent words and terminologies. Next, in the next section, I'm going to go over different portfolios. We have 5 different types of portfolios.